The market chopped sideways all day as we wait for the farm payroll reports. This is Invest with Jacob. Okay, guys, so if you're like me and you watch the market all day, today was a horrible day to do that. It chopped around all day, moving up and down like it was doing burpees, basically wasting 6.5 hours of our time and closing flat. Now we must look to our next catalyst in the farm payroll reports. I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the Nasdaq. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, with nothing really happening in the market today, we kind of have to wait for our next catalyst to get a little more information. So let's jump into the chart and take a look. Okay, guys, so here we are on the 5-minute SPX chart. And if you remember, the move off of this low was sloppy. We had a 3 up and a 3 down and then a 3 up. And now we have this low that came down and hit our support zone perfectly, almost to the penny, and bounced. But then it gave us basically this rising wedge chop pattern that was pretty useless for the day and is not impulsive off of this low. And so generally that wants to resolve lower. However, with this completely sloppy pattern all the way through, it's really hard to decipher exactly what's going to happen next. I think that the catalyst in the morning here, the farm payroll report, will help with that. But as it stands right now, our parameters are pretty much the same as they were yesterday. So we're basically tracing out a diagonal off of this low. They pushed it higher in 3-wave sets, and then they dropped in 3 waves, and then they gave us this chop pattern, and they did hold the key support level. So if you remember yesterday, we talked about our key support level. We would like to see the market hold 41.35 SPX, which it did almost perfectly, but it needed to hold 41.26.27 SPX in this area down here at the 618 as kind of line in the sand support. Is when the pivot breaks, we can see a move to the downside pretty quickly. So they did hold it. The problem is this, like I said, this is just all chop, and it's not giving us much information here at all. So I did kind of adjust a little bit here. I think that we may have seen all of wave 3 up to just over the 1, 2, 3, 6 here at the last high, and then the pullback here in 4 down to support, and then this chop here could be like the A wave of this 5, where you get an A up, a B, and then a C. Remember, A, B waves can be very choppy and very difficult to track. So we could be seeing an A wave up here, but this is just such an ugly structure that it's hard for me to see the market moving directly higher off of this. Does that mean it can't happen? Of course not. Of course it can move higher. It's just not a structure that's generally conducive to that. So a little bit of indecision by the market up here, a lot of consolidation up here near the top as they try to figure out if they're going to continue to push or we see a pullback. But ultimately, our key level is 41.26.27. Below that, okay, the bears can start to take control, but ultimately they need to break this 40.80 level for us to fully have the pullback underway. So not a whole lot has changed since yesterday, other than we got a day of choppiness. Let's take a look at the futures real quick before we jump into the Nasdaq. Okay, so the futures overnight actually pushed up and made a little bit of a higher high here. And then we got this move down here to the support level. And then they have just been having a rising wedge here come up on the futures, and they've slowly been pushing it up. And again, this is a pattern that once it completes generally sells off pretty hard to the downside. So this is another reason I'm not convinced that they can push this higher. But as long as they're over that 41.26 level on the SPX, the bulls are in control of the market. So the bears need to break that 41.26.27 area and then 40.80 to fully get the pullback underway. So make sure you understand those key levels before you start to short this market, because until we're below those, the bears can just keep grinding it higher like they're doing right here. All right, so the futures look like a rising wedge right now, which, as I said, generally ends in a big sell-off. But we will see if that happens maybe in the morning when we get our catalyst. All right, over on the Nasdaq. Okay, we got a similar type setup where they moved higher here in the overnights and then sold off down to close to our support level. You'd expect about the 1.0. They got down there close, and then they have also pushed up in a rising wedge to a new high. So the Nasdaq continues to press higher, while the ES is still lagging behind at making new highs. So the Nasdaq is definitely leading the charge here. So that tells me that the ES could follow higher. But if the Nasdaq decides to complete and sell off, the ES will follow whether it makes a new high or not. So we do have this rising wedge pattern on the Nasdaq as well. And again, when those complete, they tend to sell off pretty hard. And the Nasdaq moving up was a diagonal. So you got a lot of sloppy action up here that we're tracing. So a little bit indecisive from the market in the micro counts. And if you've watched this channel for any amount of time, my criticism of Elliott Wave Theory is that it can struggle in the micro counts at times, but it's pretty good overall in the macro counts. So this is one of those times where the micro count is struggling because you're getting so much chop and so much overlap that it's not a clear pattern in either direction. So what we do is we look at our support levels and we say, okay, when those break, we can adjust and figure out our pattern from there. And the pattern, or the support levels on the Nasdaq, guys, we want to hold that 13,036 level. Anything below that, we can start to look for the pullback to take place, but they still ultimately need to break this 12,814 level down here, this low, and break that to move lower. Guys, if you like the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com, okay? There's a link down in the description. Go ahead and click that link. It will take you right over to the website. Once you get there, check out our membership plans area. We have 2 incredible plans, and both of them come with a 7-day free trial. Okay, that's because I want you to get in there, try it out, make sure you love it, make sure it's for you before you ever spend a penny. In my room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, as well as all of your Elliott Wave questions answered. I trade the SPY and the QQQ, and we swing trade, which means that our trades can last anywhere from a few days to a few months, so we don't trade quite as often as the day trading room does. However, if you are interested in day trading and individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that just kills the market. It's a great structure that gets you in there very cheap and gets big multiples on your money. And it's something you kind of have to see because it's a pretty unique trading style. And that's why we give you that 7-day free trial so you can get in there, test it out, and make sure you love it, and then go from there. He also started a challenge account where he put $4,000 into a small account and used his disciplined trading methods and mini ES futures to average 3 to 4% gains on that account, showing you how to build a small account into a huge retirement or savings account. Guys, we would love to have you in the rooms so we can make some money together. All right, key takeaways for today. Guys, this is a time where you might want to sit on your hands and stay out of trading until the market gives us a more clear signal on what it wants to do. It has a rising wedge pattern that could bring us down, but ultimately the key level to watch is 4126 SPX, okay, not ES. On the SPX, it's 4126.27 in that level. They break that, okay, then we're looking for the bears to continue pushing down and break that 4080 level to start the pullback down toward either wave 4 or wave B, as we've been highlighting in our previous videos. Over on the Nasdaq, same kind of situation. You have this rising wedge pattern going up. The Nasdaq continues to push higher. And generally, when these patterns complete, they sell off pretty hard, but we need to wait for that and wait for support to break. And on the Nasdaq, the bulls are still in control over 13,036, but if that breaks, then the bears would look to break that 12,814 low. And if they can do that, then they should be on their way in the pullback. Guys, it's the weekend. All right, grab yourself a drink, enjoy your family, have a great weekend, and I will talk to you next week.